Welcome back to Talk Tickers. All right, everyone, settle in because today we're going deep on JD.com's Q3 2024 earnings call. Got the transcript right here and some key stock info. So think of us as your guides through the crazy world of e-commerce in China.
Yeah, it's a wild ride for sure, but JD seems to be handling it pretty well, especially with this nationwide appliance trade-in program that's going on over there. It's really shaking things up.
Oh, that caught my eye too. Stock actually dipped a little, even though they beat earnings estimates. What's the deal with that?
Well, revenue growth was a bit lower than analysts were hoping for. That always spooks the market a little bit. But taking a step back, JD is in a really good spot to benefit from some big trends in the Chinese economy. This trade-in program is a perfect example.
So you're saying it's not just a quick bump for JD?
No, not at all. JD is a major player in this whole program, and they're using their logistics network to make the whole experience super smooth for customers. I mean, think about it. They're handling everything, taking apart the old appliances, shipping the new ones, installing them, the whole 9 yards.
That's impressive.
Yeah.
And it sounds like the government is totally on board with this.
Oh, yeah, for sure. They see this program as a way to get people to upgrade to more energy-efficient appliances. It's boosting demand and pushing for innovation in manufacturing. It's a win-win, and JD is right in the middle of it.
So how's this showing up in their actual numbers?
Well, their revenue from electronics and home appliances actually turned around this quarter, and a lot of that is thanks to the trade-in program.
So it's working. But what about the rest of their business? Are they just banking on appliances?
Definitely not. Their supermarket revenue saw double-digit growth, and they're really focused on offering a wider range of products at different price points. They're even trying new things like direct shipments to make things even more convenient. And don't forget about their general merchandise. Apparel and sporting goods also had double-digit growth.
Sounds like they're doing well across the board. But Chinese e-commerce is super competitive, right? How do they stay ahead of the game?
Well, one thing is they're really focused on keeping prices competitive. They're using their self-operated supply chain, which is what's called 1P. Basically, they're selling products directly, but they're also growing their 3P offerings, which means working with third-party sellers on their platform. This lets them have a bigger selection and still keep prices down. Think about those Super 18 sales, weekly Black Friday deals on groceries, and all the late-night flash sales.
Sounds like a bargain hunter's dream.
You got it. And it's working. They've seen double-digit growth in active users for the past 4 quarters in a row.
Wow, that's massive. So it's all about getting new users.
Well, it's about getting them and keeping them. They're offering things like free shipping and expanding their JD Plus program, which is like a premium membership. That's really gaining some serious traction.
Makes sense. People love a good deal and a smooth experience. What about their platform itself? Making any changes there?
Yeah, they're definitely focused on growing the whole ecosystem, bringing on more 3P merchants, especially small and medium businesses, to give shoppers more choices. And it's paying off. Their active merchant base is growing, and both 3P order volume and the number of users buying 3P products hit record highs.
So they're building a bigger and more exciting marketplace? But is it profitable? E-commerce can be tough, especially in such a competitive market.
And this is where JD's really shining. Their gross profit went up 16%. Their gross margin expanded for the 10th quarter in a row. And they're forecasting double-digit growth in their non-GAAP net profit for the year. Plus, they finish a $3 billion share repurchase program and announced a new one for $5 billion.
Now that shows some confidence.
It really does. Shows they're feeling good about the future. And there's another part of this we haven't even talked about yet. JD Logistics.
Oh, right, their logistics arm. Heard good things about that.
It's been a real star. Revenue is up 7%, but the really impressive part is profitability. Their non-GAAP operating income exploded. It was up 624% year on year. They're all about efficiency and service, and it shows in their numbers. Gives them a real edge over the competition, especially as they look to move into new areas.
Speaking of new areas, they did mention some adjustments and losses with some of their newer businesses, like Jinxie. Sounds like that one's been a bit of a rough ride.
Well, Jinxie is their community group buying platform. And that's a really tough market. It's all about getting people in a neighborhood to buy groceries together in bulk for a discount.
Ah, I see. So not surprising they're facing challenges there.
Right. Super competitive space with tiny margins. But these new ventures are still in their early stages, and JD seems committed to investing in areas that will drive long-term growth, even if there are bumps along the way.
Takes guts to keep experimenting and pushing the boundaries like that. So overall, sounds like a pretty positive outlook for JD. But what about the competition? You mentioned earlier that the Chinese e-commerce market is a jungle. Who are the big players JD's up against?
Well, the elephant in the room is Alibaba. They're a massive force in Chinese e-commerce, and they're not slowing down.
So how does JD set themselves apart from a giant like Alibaba? What's their secret weapon?
They're going all in on user experience. Think free shipping, easy returns, even compensation if a delivery is late. Might seem like small things, but it all adds up to a really great shopping experience. And in a market as competitive as China, that can make a huge difference.
So going the extra mile to keep customers happy. Smart move. But where are they looking to expand next? Where is JD placing its bets for the future?
Well, beyond their core strengths in electronics and general merchandise, they're making some big moves in fashion and beauty. They want to be the go-to place for those categories.
Interesting. So they're not happy with just being the everything store. They want to be the fashion-forward everything store.
Exactly. They're bringing in big domestic brands and up-and-coming designers, expanding their selection, and running some pretty tempting promotions. 50% off campaigns, exclusive deals. It's a pretty aggressive strategy.
Wow. Almost makes me want to update my wardrobe after all this.
Don't blame me if you go on a shopping spree. But seriously, it sounds like JD is committed to offering value and convenience no matter what you're buying. They're creating a really complete shopping experience for the modern Chinese consumer. And they're doing it all while keeping an eye on profitability.
Impressive. They're a company to watch.
Absolutely. But they're not without risks. The Chinese economy is still recovering, and any major slowdown could impact JD's growth.
Good point. What about those investments in new businesses? Could those backfire?
It's always a possibility. Not every venture is going to be a home run, and JD needs to be careful not to spread themselves too thin.
So a balancing act between going after new opportunities and sticking with what they're good at. But overall, it seems like they're handling these challenges pretty well.
I think so. And their financial strength gives them the flexibility to adapt and adjust as needed. Speaking of new opportunities, they did mention expanding into Southeast Asia and other markets.
Right. Is that a sign they're looking beyond China for growth?
It's definitely a strategic priority for them. The Chinese e-commerce market, while huge, is getting more and more crowded. Makes sense for them to start exploring new frontiers.
So going global isn't easy. Different markets have different tastes, regulations, competitive landscapes. What makes them think they can succeed outside of China?
You're right. It's not just copy and paste from their China playbook. They'll need to adapt and tailor their approach to each market. And let's be real, they'll be up against some giants like Amazon and Alibaba who are also expanding aggressively.
It's a David and Goliath situation for sure. But JD does have some advantages. Their logistics expertise is a big one, and they're known for competitive prices.
They've also shown they're willing to learn and adjust their strategies based on what works. Their expansion into Southeast Asia has been pretty successful so far, and they're using those lessons for their overall international strategy.
So not afraid to experiment. It's a long game for sure. But it'll be interesting to see if they can crack the code of global e-commerce and become a true global player.
Definitely keeping an eye on them. It's a challenge worthy of their ambition.
So before we move on, any final thoughts on JD.com's Q3 earnings call? What's the key takeaway for our Talk Ticker listeners?
The main message, I think, is that JD is really firing on all cylinders right now. They're executing well financially, they're strong, and they're in a great position to benefit from the growth opportunities both in China and beyond.
They have a clear vision and they can make it happen. That's what makes them such an interesting company to follow.
Couldn't agree more. Now, before we wrap up completely, should we have a little fun with our This Is Not Financial Advice segment?
I was just thinking that. Already got an idea brewing. All right, so we've talked about how JD is really going all in on this appliance trade-in program and how their logistics network is a big advantage.
Yeah, it's like their secret weapon.
Exactly. So my idea is, what if we look beyond JD itself and think about the companies that supply the parts for these new appliances?
Oh, interesting. So like a play on the whole supply chain.
Exactly. As more people upgrade their appliances through JD, the demand for parts and components is going to go up.
Makes sense. It's like that old saying about selling shovels during a gold rush.
Yeah, instead of betting on the miners, you invest in the shovel sellers. Because those new fridges and washing machines are going to need repairs eventually, and that's where those parts suppliers come in.
It's a bit of a contrarian bet, but it could have some legs, especially if JD's appliance trade-in program keeps growing.
Definitely just throwing it out there, listeners. This is all hypothetical.
Yeah.
We're just brainstorming here. Definitely not financial advice.
Always good to remind people of that. But it's fun to think outside the box and look for those hidden opportunities.
Absolutely. Well, I think that wraps up our This Is Not Financial Advice segment for today. Back to JD. We've covered a lot: their dominance in e-commerce, their incredible logistics network, their ambitious global expansion plans.
They're a company that's always pushing the limits and innovating. It's been really interesting to dig into their earnings call and see where they're headed.
I think the biggest takeaway for me is just how well they're executing on their strategy. They're firing on all cylinders, and they seem to have a very clear vision for the future.
Yeah, they're definitely a force to be reckoned with, both in China and on the world stage. Excited to see what they do next.
So speaking of their logistics network, we haven't really gotten into the nitty-gritty of that yet. It's clearly a major advantage for them, especially as they expand into new areas.
Oh, yeah, it's like the backbone of their whole operation. And it's what sets them apart from a lot of their competitors, especially in China. They've invested heavily in building this robust and incredibly efficient infrastructure that covers a huge part of the country.
And that's what lets them offer those super fast delivery times that Chinese consumers have come to expect. It's become the standard.
Exactly. And they're not just fast, they're reliable. That level of control over the entire process is something they wouldn't have if they were relying on third-party logistics providers.
Right.
They control the quality and the speed, which means a better experience for the customer.
It's like they built this well-oiled machine that just keeps humming along. They had the foresight to realize that logistics would be crucial in e-commerce.
And that foresight is paying off big time. It's one of the reasons they've been able to consistently grow their active user base, even when the economy has been a little shaky. Remember, they've had double-digit growth in active users for 4 quarters straight.
That's incredible. It's not just attracting new users, but keeping them engaged and coming back for more.
Right, and it's not just about the big cities either. They're seeing strong growth in those smaller, lower-tier cities, which is where a lot of the future growth potential is.
So they're really tapping into the vastness of the Chinese consumer market. But growth isn't everything, is it? They have to be profitable too.
Absolutely, and they're doing a good job balancing those two. They've consistently expanded their gross margin, and they're on track for double-digit growth in non-GAAP net profit for the full year.
So they're not falling into that trap of sacrificing profits for growth that so many companies do.
Nope. They're investing heavily in things like logistics and technology, but they're doing it strategically and with a focus on long-term sustainability.
It's a tough balancing act for sure, but JD seems to be finding the sweet spot.
They are, and that financial stability is crucial. It gives them the flexibility to go after new opportunities and deal with any unexpected problems that might pop up. And speaking of new opportunities, they did mention expanding their presence in Southeast Asia and other markets.
Oh, right. Is that a sign that they're starting to look beyond China for growth?
I think it's definitely a strategic priority for them. The Chinese e-commerce market, while huge, is getting pretty crowded. Makes sense for them to start exploring new frontiers.
But going global is no easy feat. Different markets, different tastes, regulations, competitive landscapes. What makes them think they can succeed outside of China?
Yeah, you're right. It's not just a matter of copying and pasting their China playbook. They'll need to be adaptable and tailor their approach to each market. And let's be honest, they'll be up against some heavy hitters like Amazon and Alibaba who are also expanding quickly.
It's a real David versus Goliath situation. But JD does have some things going for them. Their logistics expertise is a big one, and they're known for having competitive prices.
They've also shown that they're willing to learn and adjust their strategies based on what works. Their expansion into Southeast Asia has been relatively successful so far, and they're applying those lessons to their overall international strategy.
So they're not afraid to experiment and iterate. It's a long game for sure, but it'll be fascinating to see if they can figure out global e-commerce and become a true global player.
I'm definitely watching them. It's a challenge that matches their ambition.
So before we change gears, any final thoughts on JD.com's Q3 earnings call? What's the key takeaway for our Talk Ticker listeners?
I think the main message is that JD.com is really hitting their stride right now. They're executing their strategy effectively, their financials are strong, and they're in a great position to take advantage of the growth opportunities in China and beyond.
They have a clear vision and the ability to turn that vision into reality. That's what makes them such a compelling company to follow.
I agree completely. Now, before we wrap up completely, want to have a little fun with our This Is Not Financial Advice segment?
Oh, yeah. Let's do it. I've got an idea already.
Yeah.
All right. So JD is really pushing this appliance trade-in program, right? And we talked about how their logistics network gives them a big advantage.
Yeah. They're handling everything themselves, like picking up the old appliances and installing the new ones.
So here's my thought. What if we look beyond JD itself? Like, what about the companies that are making the parts for all these new appliances?
Oh, I like it, like a supply chain play?
Exactly. Because as more people upgrade their appliances, the demand for parts and components is going to go up.
It's like that old saying, right, about selling shovels during a gold rush.
Yeah, and instead of betting on the miners, you bet on the shovel sellers. Those new fridges and washing machines are going to need repairs eventually. That's where those part suppliers come in.
It's a contrarian play for sure, but it could be interesting, especially if JD's trade-in program really takes off.
Of course, this is all just hypothetical.
Yeah.
Folks, we're just having some fun here, exploring some ideas. This is not financial advice.
Always good to remind everyone of that. But it's fun to think outside the box, right?
Totally. All right, well, that about wraps up our This Is Not Financial Advice segment for today. Back to JD. We've covered a lot, their dominance in e-commerce, that amazing logistics network, their global ambitions.
They're a company that never seems to stand still, always innovating. It's been great to break down their earnings call and see where they're headed.
Yeah, I think the biggest thing for me is just how well they're executing their plan. They're doing great financially, and they have a really clear vision for what they want to do.
They're definitely a major player, both in China and globally. I'm excited to see what they do next.
Well, that's it for our deep dive into JD.com's Q3 2024 earnings call. Thanks for listening.
Yeah, thanks for joining us on Talk Tickers. We'll be back soon with another earnings call breakdown. Until then, happy investing, everybody.